Did want to come quickly to M&A, if I might, and get to what's been going on at CoreLogic. It's a company that I've been following for some time. Our viewers may recall when Senator and Kane got in there, took significant position, moved to replace some board members, and made a bid to buy the company. Then it was in the, 66, 67, but it did force the company to put itself up for sale. We did get a deal. But now we got another potential higher bid there. Not potential. It is higher, the bid, from CoStar. CoStar all along had been thought to be the most likely buyer of the company. And so it was somewhat unexpected when they announced the deal with private equity at $80 a share in cash. But for the last couple of weeks, since that was announced, there has been an expectation that CoStar would, in fact, come back. And they have. All-stock deal, though, which is interesting because their initial bid, which they have now told us, but we also kind of knew, was also all-stock. And there had been an expectation perhaps they would use cash, but they haven't. It's 0.1019. It did equate to 95.76 at the open. We'll keep an eye on CoStar's share price because it did appear to be moving lower, and I want to see if it has. I assume it has, and therefore the overall value of the bid is obviously not that. It did represent a 17% premium. They're talking about significant synergies. And by the way, in speaking to people familiar with the bid itself, they tell me why no cash? Well, we're going to redeem on closing $2 billion of CoreLogic's debt, so we need cash for that. And they're also talking about making significant investments to deliver on those synergies, which is going to as well require cash. So two reasons why the deal does not, as might have been expected when they were thought to potentially come back here, why it does not contain any cash. It's a very highly valued stock. Of course, that may have given CoreLogic's board some pause. There also was concern about antitrust risk and the fact that it would take longer simply to get those approvals. If you do get a second request here, it could be as much as a year. They will only have the merger agreement, they say, in place for a year. They are going to pay a $330 million reverse break fee. That is the same as being paid by private equity in the event that they were to be, for example, forced to abandon the deal as a result of an antitrust review. But overall, guys, this would appear to be, of course, a significantly higher bid, even with CoStar stock down over 5%. You can see CoreLogic shares are moving up significantly. Unclear exactly what the back and forth was around the end of the auction, so to speak, and why this bid was not made as part of the initial auction for the company. In their letter that accompanies the press release this morning, CoStar does indicate they thought they had a handshake deal at 86 and change, all stock, only to find out 24 hours later that they had lost that to $80 all in cash. We'll see what's next. The word out of course, as you expect from CoreLogic, is they will study this and they will make a decision as to how to move forward. One would expect, Mike, that they will choose the CoStar bid should the private equity firms not come back with a higher offer.
It would seem so. And, just to broaden it out a little bit, this has been a very quiet subsector of the market where it's kind of data and information utilities for a specific industry that has done incredibly well. Obviously, the index providers and financial services, things like Verisk and insurance. So it's just sort of fascinating how this is a weird little group that I could see why private equity would be there, because it's thought to be, tough to replicate and data only becomes more valuable, apparently.
Yeah, and CoStar, to your point, has been a very strong performer as well. One reason why it's in a position to potentially offer all stock and have it be valued in the way it is, but it's trading 50 to 60 times, Mike. And there is a question as to whether that is sustainable. But even with a significant fall in its stock price, its current bid would seem to be above.
Shepard Smith here. Thanks for watching CNBC on YouTube.